Hello friends, I am DK and I welcome you all to your own channel. Friends, today we have come up with Zero to Hero, our popular tutorial series with the episode number 4040. And friends, in this particular episode, we will be talking about and learning about MACD indicator, which is one of the popular indicators for technical analysis. We will know the secret of MACD, how it is constructed, and what are the uses of MACD. We will also go to the price chart to understand the application aspect of MACD to enhance our accuracy in technical analysis. So friends, if you're watching this video, have not yet subscribed the channel, do subscribe, enable the notification bell so that you remain updated all the time for new videos uploaded on this channel. Friends, if you are interested to know all about the membership of the channel, you can click on to the link provided below in the description box of this video, and you can know all about the perks and benefits that are being offered under various membership programs on this channel. So friends, let's begin the tutorial series Zero to Hero episode number 40 and learn all about MACD as an indicator. So friends, let us first understand what is moving average convergence and divergence, which is MACD, and also called MACD. So it doesn't matter in what way you call it, but the purpose is to understand the concept behind its construction, so that when we apply during our technical analysis, we have the conceptual understanding as to what we are looking at on the chart. So friends, it is also a momentum indicator. MACD or MACD is a trend following momentum indicator which shows the relationship between two moving averages. As simple as that. It is one of the simplest indicators, that it shows the relationship between two moving averages of different time periods of the stock price. So friends, what are those moving averages? EMA, exponential moving average 26, and exponential moving average 12. The moment you plot even on the body of the chart EMA 26 and EMA 12, you can understand the momentum aspect of price action in the market and value of MACD. Because on a chart, we will look on the price chart also. On the chart, a MACD line is automatically drawn. And what is the calculation of that MACD line and its value? Is when you subtract EMA 26 from EMA 12 period, it gives the value of MACD line. It is that simple. So EMA 12 minus EMA 26 is the value of MACD line. Let us go ahead and understand further. Now let us understand the various elements of MACD. When you look at your price chart, MACD has three distinct elements. And what are those? One, just now I have told you about the MACD line. MACD line is nothing but when EMA 12 minus EMA 26. So the first element is MACD line, where it is showing the relationship between exponential moving average 12 and exponential moving average 26. If the very formula of MACD line indicates EMA 12 minus EMA 26, which means what? If EMA 12 is above EMA 26 on the price chart, it will show the positive value. And when EMA 12 is below the EMA 26, it will show the negative value. It is basic arithmetical formula. And friend, another element of MACD is when we plot the exponential moving average 9 of MACD values, it plots the signal line. It's very simple. And then third element is the histogram. Many of the technical analysts, they don't make use of histogram because ultimately the MACD line and the signal line gives a majority of the analysis and assistance. It is also one of the supporting indicators because price and volume are the base parameters. So any indicator or oscillator that we are using is a base parameter, is a supporting tool. So MACDs also cannot be used on a standalone basis. It has to be combined and used in conjunction with the price volume analysis. So MACD histogram indicates very simple thing. It measures the distance between MACD and signal line. The first two elements, if their distance is wider enough, there will be large formation of histograms. And the size of histogram will reduce at the gap between the MACD line and signal line is reducing. So it's basically indicating the effect of diminishing effect of momentum in the price action, which we will look at the price chart today when we take up the example of MACD and as to how it can be used to apply on the price action analysis for higher degree of accuracy, because our motto is nothing but to attain higher degree of accuracy in performance of technical analysis. So MACD as an indicator is used to get the buy and sell signals. But let me caution you that it gives us several false buy and sell signals. And hence, it is to be used only in conjunction with the price action analysis for high degree of accuracy. MACD can be used as one of the confluences to find out high probability trade in the market. So let us first understand as to how it gives a buy and sell signal. So we have just now explained you that MACD line or MACD as an indicator will have a positive value when the 12 period exponential moving average is above the 26 period exponential moving average, and will have a negative value if 12 period EMA is below EMA 26. And friend, whenever MACD triggers technical signals in two conditions. When MACD line crosses above the signal line, it's a buy signal. And when MACD line crosses under the signal line, it's a sell signal. But the biggest limitation of MACD is that on a standalone basis, it gives us several false signals. Then what we have to do? How to resolve this issue? The only way to resolve this issue is to do the price action analysis and combine with other studies and use MACD as a supporting tool to enhance the accuracy in technical analysis. So it's very, very significant that no indicator or no oscillator can be used on a standalone basis if not combined with the other studies of technical analysis, and especially the analysis of price and volume as a base parameters. So friends, now let us understand third element of MACD, that is MACD histogram. As the name suggests, histogram means it has to consist of several bars. Now let me emphasize that when the MACD indicator was developed originally, it was having only two elements. the MACD line and the signal line. MACD line is the relationship between EMA 12 and EMA 26, while signal line is plotting the EMA 9 of MACD line. But later on, the third element was incorporated much later after MACD as an indicator was developed, and which was histogram. And primarily the histogram measures the distance between MACD and its signal line. Wider the gap between MACD and signal line, larger would be the size of histogram. The 9-day EMA of MACD is a signal line. So, in other words, histogram or MACD histogram is an oscillator which oscillates above and below the zero line. Because if the value of MACD is negative, in such situation when EMA 12 is below EMA 26, it will have a negative value. And now all the histograms shall be plotted below the zero line because it has a negative value. The only thing, the size of histogram will depend upon the gap between MACD line and signal line. It is that simple. So up till now we have understood the method which it follows to construct the construction of MACD and its various elements, that is 3 elements. Now let us understand as to how these 3 elements can be useful to analyze the market in conjunction with other studies, especially price and volume analysis. So application is broadly categorized into 2 parts. It gives a buy and sell signal whenever MACD line crosses over or crosses under the signal line, and second is the divergence. Since it is a momentum indicator and histogram is acting as an oscillator, so divergence is observed on MACD indicator in the similar fashion as it is done in RSI or stochastic, which we have learned in the previous episodes under 0 to hero. Divergence is nothing but is indication of, price is speaking the language which momentum indicator is deviating from. So it gives a diminishing effect of the momentum, either in the markup phase or in markdown phase. The divergence indicates the diminishing effect of the upside momentum or a downside momentum, which gives an early signal for reversal or pullback, which we have learned under 0 to hero under several tutorial series, and we have explained many a times when we perform the technical analysis on this channel under our live streams, that is Know Your Stocks every Tuesday, every Thursday at 8:30 p.m. and live streaming Ask DK 11:55 a.m. and also 8 p.m. Sunday Bite on every Sunday. We want, friends, this channel to become one of the most admired channel imparting education on technical analysis of financial markets. And so there is a greater emphasis in imparting education so that people not only understand the theoretical aspect of it, but start understanding the practical aspect of it as to how these theories what we are learning under 0 to hero can well be applied to perform the technical analysis in effective fashion when we do the technical analysis to find the high probability trade or take an investing decision in the stock market or commodity market or currency pairs. So now, friends, let's go straight away to the price chart. and understand the application aspect of MACD in conjunction with price volume analysis. So friends, this is the price chart of Biocon in daily time frame. The purpose of this chart is it could be of any financial products in the market or stock market or a commodity market or currency market, doesn't matter. I have opened this chart basically to explain you the various elements of MACD and as to how it is constructed to have the conceptual bearing in your mind. So friend, first thing what I have done is I have removed all the moving averages from the chart which we normally use to perform the technical analysis with the sole aim of explaining you MACD as an indicator. So what I have selected, this green color line is EMA 12 and blue color line is EMA 26. Now what is the MACD line? The MACD line is nothing but the difference between EMA 12 and EMA 26. So for example, if you see here, EMA 12 is above EMA 55. So in this zone, the value of MACD would be positive. And in this area, if you see, the EMA 12 has crossed under EMA 26. So the MACD line value will be negative. So let us understand, in this scenario, we can easily understand as to how MACD line is calculated. Now the second element was what? It was signal line. Now signal line is nothing but various values of various values of MACD line is used to plot the exponential moving average 9 of these values of MACD line. So automatically a signal line gets constructed. And what is the histogram? Histogram is nothing but the gap between MACD line and signal line. So now let us go to the MACD as a tool. Now I am making it a little larger. This is the MACD showing all the three elements of it. The blue color line shows the MACD line, while red color line shows the signal line. While these are the histograms, histograms is plotted above the zero line. This is the zero line. You can see the value 0 here. If it is plotted above the zero line, it is shown in green color, various histograms, green color. And when it is plotted below the zero line, it shows the red color. Now, what is the histogram? If the gap between these two, MACD line and signal line, is wider, the histogram would be larger. If you see in this area, the MACD line is quite closer to signal line, so this histogram are smaller. So histogram indicates as to how signal line and MACD line are apart. Now let us understand as to how we can use these. One is the buy signal. This is the crossover. You can see the MACD line has crossed over signal line. So this in a broader sense is considered to be a buy signal. And when it has crossed under, it indicates the sell signal. But this is not sufficient. You can see number of buy and sell signals in this particular area, and majority of the trade has failed. So first and foremost thing to remember, the rule number 1 is, it is a trend following momentum indicator. So whenever you get a buy signal in the uptrending market, when the price is trading in a markup phase, the probability of that signal to be reliable is greater. And when the market is trading in the markdown phase, the cross under, that is the sell signal, could be relevant. But is this enough? I won't say this is enough. Because you see, here the price is trending up. Now the question here is, if you see this correction which has taken place and the price has corrected, and if you combine the price action analysis, so what I'm trying to show you is a little analytical aspect of it. You see the price was facing resistance here, you can see the rejection, and ultimately this correction halted here with a gap down candle. So what I'm trying to analyze is, one, this was a resistance and the price is looking to take support at this area. And then you have a gap down candle, a kind of inverted hammer formation, which is a reversal bullish candlestick pattern. So at this area, if you see a crossover, here it is a crossover, so it could be a good long trade opportunity. Now let us see the another aspect, the divergence aspect. Can we see the price here has made higher highs while the MACD is not making higher highs, and while MACD is not making higher highs. So it is showing bearish divergence or called negative divergence. So this being a momentum indicator can also be used to check the divergence aspect in the analysis. Now let us go back on the same chart and see this was the area when the price was trading down. You see the price has fallen, pullback, price rejection for the key moving averages, and here you can see the cross under. This could be a relevant cross under or a sell signal in moving MACD. So friend, it has to be combined with price action analysis to be more relevant and to be used as a supporting tool. On a standalone basis, it might give us several false signal. So we can see here, you can see the price has made head and shoulder kind of formation. I will draw a line to explain you. If I join this line, what it indicates, this is a left shoulder, head, right shoulder, breakdown, and if you see here, there is a cross under, histogram is getting formed below the zero line in a red color. So this is giving, a very good short trading opportunity in markup phase of the market, where we are combining the chart pattern with a critical rejection from the moving averages. And third, we are combining with MACD, and there is a significant rise in the volume. So multiple confluences are there. The chart pattern, the rejection from the moving average, and then MACD line also showing, and the formation of bearish candlestick. So all these analysis when combined and you have the confluences, then you are likely to be more accurate in technical analysis. So MACD is a supporting momentum indicator which can be used to indicate the divergence. If you see here, the price has shown the reversal. Can you see here the price was making lower lows while MACD was not making lower lows. So there is a bullish divergence. So MACD used to check the signal in conjunction with the price is used to also find out the divergences aspect in the technical analysis. So friends, if you have liked this presentation, please give thumbs up to this video. When you like the video, it gives me motivation, which becomes a very important source of continuous energy to me. I would be expecting and awaiting for your comments in the comment section of this video. Please share the video among your known ones so that others also get benefit out of these kind of videos and tutorial series on the channel. And in the process, they can subscribe the channel to become part of your and my family. And friends, subscribe the channel, enable the notification bell so that you remain updated all the time. Thank you very much for watching. Looking forward to meet you very soon.